Hello and welcome to the paid weekly recap for the week ending August 15th, 2025. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence behind the predictive AI for dynamic market system. Normal disclosures before we get started: options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trade advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. If you need more time with the disclosures, I recommend you pause the video now. Otherwise, we'll get into the recap for this week. So first things first, we have the 10-year yield, which tested 4.2%, started looking like it was going to break further after non-farm payrolls, bounced back, faded, bounced back. It is still continuing this chop. We had CPI data earlier this week that came in lower than expected, so showing low inflation numbers, helping with confidence about the Fed potential interest rate maneuvering over the course of the next few months. And then PPI came in high on Thursday, putting a little bit more concern about inflation. So it's a balancing act as we navigate tariffs, as we navigate earnings, and evaluate the growth of the U.S. economy. Now, along with that, we did have the market make a new high on Wednesday post CPI. And after PPI, we originally dipped, bounced back, tried to break out on Friday, and ultimately ended up near the session lows by the end of the day. We're still in a bull market. We're still above the previous highs. We have found support at the 640 level for SPY, which used to be resistance. So overall, the market is in bull territory. It's just a question of how many dips and troughs do we have along with that shopping bull market. Tech, along with that, did break out on Wednesday, pulled back Thursday, Friday. So we're seeing a little bit of weakness in tech. We had a little bit much weaker than expected applied materials earnings, and they got hit hard at the end of the week on Friday. Semiconductors just not giving that great leadership, and maybe some sort of tariff resolution can help shift the tone there, and/or Nvidia earnings coming up in just over a week. So it won't be this week, but next week, the following week, we will see Nvidia earnings on the 27th, and maybe that is the trigger to either get tech into full bull mode or potentially create a pullback that becomes a little bit more concerning for the bull and maybe gives a little bit of gas to the bear. And then finally, of course, small caps. Small caps started to get some rotation. Tuesday and Wednesday looked really good for small caps, and then we pulled back Thursday and Friday. But small caps have been an underloved sector. The previous high made back in 2024 was around 245 in IWM. So we still have a long way to go to get back to those 2024 highs. A bit different scenario than what we're seeing right now in large caps, global markets, tech, etc. Small caps just continue to be a laggard. Whether this week's jump start was the start of something more continuous and more consistent in the future is to be determined. But for now, at least they've gotten off of the floor for a little bit. And we got to continue to watch financials and healthcare and industrials as main sectors within that small cap investment thesis, as well as those just looking for value, such as Warren Buffett this past week, who put a big investment in United Healthcare near the lows of the last few years. So if we start seeing more investment community looking for those turnaround stories, they may look no further than small caps. And that could start something else a little bit more exciting for the small caps. But for now, it's just not been an exciting sector. And then finally, we have the VIX. The VIX made a new low on Tuesday or on Wednesday, Tuesday fading, and then Wednesday the low. Thursday and Friday back up a little bit with that pullback in the market overall. Still sitting at 15%, so it's generally low here. Continued updates on tariffs and things can help shift that lower, especially given that we've had a much tighter range than we saw back in April. Now, as we get a few more months behind us, this will drop off the 6-month charts, and that will start to really put it in the distant memory for a lot of people. Still a memory out there, still something that's factored into people's models, still factored into people's decision making. But the further and further we go beyond that without a major dip, the more the VIX can actually fall. So right now there is a hesitancy to just go in unrestricted, no protection, just in case. And that lack of desire to have unhedged longs keeps the VIX a little bit more elevated than maybe it should be given recent realized volatility. That concern is still there. And that helps to create actually a ceiling to a certain extent for the market. Even with a 15 VIX, which seems low, we can certainly go lower as people stop picturing out an April-like collapse in the market. We could see the VIX down at 11 or 12, but that may take time. Now, usually as that VIX drops and we start getting stock selections coming in a little bit more clearly, that does generate some more predictable signals for AI. But we have been seeing a lot of chop where some stocks and some sectors get bought for a couple of days and then faded, much like we just saw in IWM. So we're seeing a lot of consolidation expectation as opposed to bullish trend. As a result, we didn't have any paid trades this past week, and we do not expect one for this upcoming week, mainly because the name that came up for next week is too high of a dollar price for most allocations. So we had a couple of signals that looked like they were coming through, but they're just a bit too expensive. And I'll give you an example. URI, it's a $900 stock. It's just not accessible to most. So we're going to let that one go, and we'll look for new opportunities, not this week, but next. In the meanwhile, make sure you're watching that trading room because we do have some great opportunities that come up in that trading room, talking through some earnings ideas, talking through directional trades, and evaluating any stocks that you guys may have interest in. Always happy to talk through them from 9:15 till 10:15, 10:30 Eastern time in the morning, and from 3 to 4 in the afternoons Eastern time. We'll talk through a lot of different ideas, a lot of different setups, and a lot of different types of trades than necessarily needing a bullish directional trade. We can just simply trade off of that consolidation and or earnings, as mentioned before. So be sure to check that out. And if you have any other questions and you can't make it on that trading room, you can always feel free to email us. I'm Keith at yellowtunnel.com and Vlad is Vlad at yellowtunnel.com. Here's to happy trading and another good week for everybody. And we'll look forward to some new ideas in the near future. Thanks again.